Hey guys, how's it going? Welcome to the London session recap for Wednesday, the 16th of March. So as always, going to keep reminding ourselves, even though you're probably sick of me saying it, we are sitting in this extreme monthly demand zone. So we do have to be aware that we could start to see some sort of more longer term bullish pressure coming into the market. But even if we don't, it's going to take a while for price to absorb all of this demand. So that's typically why we're going to see quite choppier and indecisive and less clear intentions on those more lower timeframes, i.e. the daily, the 4 hour, especially M15, right? Because when these zones play out, they don't obviously come in and come out. It takes months for just one candle to form, obviously. So, a lot of liquidity has to be built and taken before we kind of start to see the outcome of how price is going to react to the zone, especially as we come into the extreme weekly demand in here as well, right? So potentially expecting at least a deeper weekly pullback up into the more premium of that range, and then we have the extreme daily zone in here as well. Okay, so that's why we're trying to say the last few days, although we did have a pullback to the the distal of the prior swing range, right? We tapped into that, we saw that sensitivity come in, we started to see a bit of a sell-off, but likewise, right, we can start to see a bit more of that complex pullback, right? We can take highs, we can take lows. It can be rangy, it can be more complex when we're having those counter trend pullbacks, okay, as those orders start to be accumulated. So we came into these sell to buy wicks here on the daily, and we're starting to see a bit of pressure coming in. So whether or not it's literally just a bit of a bounce to then continue that low, or whether we're going to see this, I have absolutely no idea. That's why I just try and kind of really concentrate and keep it simple on my main two timeframes for structure and POIs, which is the 4 hour and the M15. But yeah, even these aren't really that clear at the moment, as you can see, right? We're starting to get pretty choppy. So we came up into the extremity of the range, we rejected our extreme supply, and we've been following the supply chain pretty much since the 10th of March. However, on the 13th of March, we obviously came into this 4 hour demand zone, which then led to a bullish change of character. Because if I zoom in, right, this low, obviously the next candle fell to break the prior candle's low, so we had a pullback. Then we took the low just about with this candle here, which meant that this became the high, and then we had a bullish change of character. So from that point onwards, the internal structure stayed bullish as all of these candles broke the prior candle's high. Okay, then we pulled back, and then we took that high again, so we had another bullish internal break of structure. That's the IBOS there. It's not the inside bar here. Okay, the inside bar is not the high. That is not a bullish internal break of structure. Why? Because this inside bar did not break the low. Okay, it did not take out this low. So that's why this is not a high when the internal structure is bullish. Okay, so we had that initial change of character there, then we pulled back, and then we continued that internal structure here, and that is where the bullish IBOS is. So at that point, this is the internal low, and this is the internal high. And then throughout New York yesterday, we then just about wicked that low, which then meant we had a bearish internal break of structure, which is obviously a change of character because now the internal structure is shifting from bullish to bearish. So at this point, the internal low is here, but the actual internal high, once we actually get the break, becomes this point here, the inside bar. Why? Because that is the nearest internal high once that low is taken, because it's the last candle that failed to break the prior candle's low. Okay, we can see from that point on, they all broke the prior candle's low. This candle failed to do so. Okay, so I know that can be sometimes a little bit tricky to understand. Why was this inside bar not a high and that wasn't a break, but this one does become the high? Well, the reason is because this did not break anything, right? So when we switch bullish here, all of these candles break the prior candle's high, then we simply pull back, right? We never take the low. And then once we do take the active internal high here, that is the bullish internal break of structure, okay? Which then means that this is the low. So then when, let me take it back a little bit. At this point here, do you know what? It's gonna be way easier if I do bar replay. So I appreciate some of you are quite comfortable with internal break of structure, but I think it's just key that we kind of get this down because I know it can sometimes be a little bit confusing, right? So we took the low here, right, we've come down, we've pulled back, we take the low. At that moment that we take the low, this becomes the high. We then get that bullish internal break of structure, which in this case is also a change of character because the internal structure changes from bearish to bullish. A change of character is the internal structure changing trend, okay? So next candle, what happens? We continue moving to the upside. Next candle, we continue moving to the upside. Next candle, we fail to break the prior candle's high. So now the active internal high, right, is between here and here because this was the low that broke the high, and all of those candles are one up move. Okay, now we're pulling back. So nothing happens until either of those orange lines is wicked. Okay, now we've wicked this high. So we can get rid of this orange line. So now at this point, all right, that was your internal breakage structure, not the inside bar, it's the high, because this inside bar hasn't done anything. It hasn't broken the low. If this candle, right, had a pull down and broken that low there, right, and it was one straight movement, all of those candles broke the prior candles low, then yes, that would have been the internal high, but it didn't do that. So this stays where it was, right? That was the range, and we've now broken it. Okay, so now this becomes the active internal low, and this is the high. Okay, what happens with the next candle? Right, because now we pull back, cool, and now we break the low. So now we've had a bearish IBOS, which is a change of character because the internal structure has gone from bullish to bearish. Now, when we get that change of character there and that bearish internal break of structure, right? In this case, the high does not stay where it is in the orange line because remember, for change of character, we always take the nearest internal high. And in this case, it's the inside bar. Why? Because this is the last or the nearest candle, right, to where the break happened that failed to break the prior candle's low. Okay, because if we look back, this candle obviously broke this candle's low. This candle clearly broke that candle's low, but this inside bar failed to break here, okay? So that's the high. Because essentially what happens is price comes up, we then get a range, and then we continue down. So that's why that's the nearest high to this low going. Okay, so what I'm trying to say is when we then get that bearish chock during New York yesterday, this then becomes the range that we are within. Okay, so the internal structure at this point is bearish. All right, we have potentially the continuation of this supply chain, right? We now have another valid for our supply that caused the break of this internal low, okay? And that's price action that we are then trading within coming into London, right? So I'm just gonna bring this forward to where we are. And now we have just had a bullish chock, okay? Now, there's kind of a lot going on here. A few things I wanna talk about. It's supposed to be a 4-hour chock. And we've missed one down here, okay? Now, one thing you have to understand is, well, so first thing, chock is 100% mechanical. There is no if, buts, or maybes. It's always gonna be where it is, right? The rules are, you know, they're not up for debate. It's non-negotiable, right? This is the way it will always be. What is a bit more, or requires a bit more nuance and a bit more discretion is how you interpret what that chock means to you at that moment in time. Okay, so what I mean by that is when we switch bearish here on the internal structure, yes, the internal structure is now bearish at this point here when it broke that low, and it is aligned with the overall swing structure. Likewise, now when we've come up and we've taken the high, the internal structure is now bullish on a 4-hour chart, right? Those are facts based on the way in which we map internal structure. But what that significance means to you is going to be different in certain areas, right? When we're coming down here with a lot of bearish pressure, and then we come down into extreme 4-hour daily, weekly, and monthly demand, and then we get a 4-hour bullish change of character, that's a very significant signal, okay? Because we're basically just confirming on the 4-hour chart that we've come into this, mitigated this strong demand level, and now the internal structure is shifting bullish, and now potentially we can expect a bit of a pullback, all right? Same ways when we come into the extreme supply and then we get a bearish change of character, that is where we're really paying attention to those shifts in structure. But when we're kind of, you know, bouncing between supply and demands, we're kind of choppy overall, there's no clear intentions, of course we're going to get changes of character a lot of the times, right? And they have, or I personally weigh a lot less significance on them, right? Because it doesn't give us as useful information, right? We're just chopping, we're moving sideways. So changes of character become a lot less significant. I'll still map them, I'll still bear them in mind, right? They'll still, you know, factors some significance in decision making, but I don't really care about them too much. The way I would really kind of view this, you know, coming into today's London price action was price was around here, is, well, you know, yes, this demand here had actually failed and prices spiked through, but ultimately we still have, you know, this overall demand chain, we have the supply chain. There's no real clear intention here. It's messy, it's hard, it's choppy to trade on the 4-hour chart. Really, you want to be looking from longs from down here and potentially shorts from within here. Or if you really wanted to, you could sit in your hands, right, and wait for much clearer intentions. So yeah, overall, it's pretty messy to read and to trade. And that's why basically just looking on the M15, looking for those clearer POIs and just being a lot more nimble with your management. Because although for me, I'm looking at the 4-hour chart between this range, and yes, it is bearish, and yes, we pulled back up to the premium, we mitigated supply. Overall, I'm aware in the back of my mind, right, that big monthly, weekly, and daily level we're coming into, and I'm expecting that potentially we're going to get that move, okay? So that's why Looking for longs within here makes sense. Looking for shorts from here makes sense. And I'm just being a lot more nimble with my management until something clearer happens, right? I'm more than open to the fact that we probably could break out bullish, but I'm also open to the fact that we could just continue bearish. I have no idea, but it wouldn't surprise me, right? There's a lot more going for that. Those counter trend longs to anticipate that potentially we may get that longer term move, okay? Especially as this is not really that significant for our structure, right? When you look at the kind of bigger movements in price, right? So it wouldn't surprise me at all if we see something like this over the coming days. But until that happens, whilst we're in this environment, it is tricky to trade. So you want to be a lot more selective with your trades, and you want to be aggressive with your management compared to when we have much clearer and trending conditions, right? Especially in the last few days where we're doing this. We're just ranging. It's crap and it's horrible. So yeah, hopefully it kind of cleared up that price action. I know there's a bit of a debate around internal price action things. Yes, I also would view this essentially as a sweep because we basically just wicked the low, instantly retraced. We're just pulling up more orders within this demand level. So that's another bullish sign that potentially we may be, going higher. But that doesn't mean that I still won't be happy to look for some shorts within here. Okay, I think if we look at the 15-minute, this kind of makes things a little bit simpler and a little bit clearer, because although we are within this larger M15 swing range, okay, we have some kind of reasonably nice sort of big swings within here, okay? So why that's nice, even though, you actually zoom out, price action's pretty indecisive, at least when you get those bigger swings, it allows you to play ping pong between the M15 POIs, get into those rejections on the M1 with 2, 3, 4 pip stop or whatever, and then you can hit those quick sort of between 5 and 10R sort of moves, okay? If we were in strong trending conditions and the M15 and 4-hour chart had been bearish for a long time, giving us those nice big swings, then we'd come into extreme supply, right? Then we were pulling back, and then you look for the short within here, then yes, then you can kind of hold on with a lot of volume and try and target those weak lows. But with these current conditions, the probability of that happening are a lot lower, right? Because here we took the high, we retraced, we took the low, we retraced, we're taking the high, we're coming back down. We failed to close below this low, right? If you kind of look at this as kind of one sort of big straight push up, failed to close below, swept the liquidity behind it, and now we're coming in, okay? So when you can kind of read those market conditions, you can realize that it's just, ultimately we are ranging, really. It's very indecisive. Anyway, so let's try and kind of concentrate more on the actual price action coming into London. So this POI here, it was kind of hard for me, quick analysis before the London session for me to write down. I can't, list every single thought that I have in my head of the current price action. You kind of have to read between the lines a little bit. But this POI, it's a big M15 POI. Obviously, I've refined it to the wick. Even when you refine it to the wick, we've already had multiple mitigations at that point, kind of coming into London. That initial reaction from supply clearly failed to put in a lower low. So then when we break and close above that level, right, now you have a flip. Likewise here, another one, right, break and close above the level, this is a flip as well. But then even more so, if you actually do the unrefined level, right, we'd already had multiple touches within here. So these types of POIs I don't like, but of course when they're big, you can have multiple drives into here and still pick up enough supply to give us a bit of a tradable reaction. So once we had very clear setup overall, nice equal highs on the M15, an aggressive sweep, a lot clearer on the M1, I was then happy to hit it. But I'm very mindful when I'm looking at all of these M15 demand levels, right here, wherever, right? All of these, I'm not going to draw on every single one in my pre-session analysis, but as soon as price is coming into them, I'm looking on the M1 to see, is it going to give us a clean M1 long to look for that hedge, right? To look for a long within here, or to even look for a long within here. Not necessarily high probability, but they can happen, and you can look for those longs, but I would just be targeting that next M15 supply level and then looking for that higher probability pro trend M15 short. So yeah, if you initially kind of didn't want to get in short straight away and you wanted to wait for that clearer M15 POI above that was fresh, unmitigated, had inducement, was part of the supply chain, etc., yeah, that was absolutely fine. It was just unlucky in this instance that we have obviously a lot of volatility with the war that's going on at the moment. It is what it is. It's just part and parcel of the conditions we're trading in at the moment. So you just have to accept that it is riskier. Some technical levels are going to get blown out when things like this happen. It's just part of the volatility, and you have to accept it if you want to trade through this, okay? Purely in terms of talking about technicals, if you don't want to take the M1 entry within here, and you first wanted to wait for sort of this internal demand, M15 demand to fail, and to give us, the bearish M15 shock, That's an absolutely perfect trading decision, which is absolutely fine, okay? So once we got that, and now we have an M15 sweep zone that led to the M15 change of character, we've got a lot of momentum coming in. This, in my opinion, is a high probability M15 POI. So if you set a risk entry within here, again, that's a valid loss. Likewise, if you take this one, they are both valid losses in my opinion, okay? Me personally, by the time price comes all the way down here, especially when it's then mitigated a strong level and we're coming up with a lot of momentum, I'm always going to want to wait for an M1 confirmation entry from there at least, okay? And that would be, my advice in those times. If you do use M1 CEs, then yeah, when we initially, okay, get this chock here at this point, right? That's when you can set, I would say, a risk entry. It's cool, but by kind of the time we come a fair distance, but more so we're then mitigating M15 demand level and then we're coming back, I would cancel and remove my order, right? 9 times out of 10. You want to wait for an M1 CE at the time, because I know we get questions about this a lot. What mechanical rule can you use for when to cancel an order? It's tricky. The only kind of clear one I could give you, there's a few, but one would be if it mitigates M15 demand, right? Then you want to cancel your order because you're essentially trading from against this demand coming into you. But even then, I still think there's a decent edge here. I wouldn't overthink losses massively, but if you want to keep your strike rate as high as possible, once we've had the movement away, if it doesn't come back in straight away, but instead goes all the way down to demand, then yeah, then you want to cancel your order. I mean, even here, right, there was demand from here. So there's an argument that if price came into here and then started coming back, you'd probably still want to look for that M1 CE, right? Because you're trading against this level. Which for me was a sweep. It swept these lows. It had inducement here with this structural low here. That's the low that caused the high, right? So it's decent inducement. So yeah, as soon as you saw that chock, if you then set an order, if we started to come off this level here, I wouldn't be so hot on leaving an entry order there. But obviously this is where a little bit of discretion comes into play. So yeah, hopefully that kind of I've explained the way I view the M15 there. If you took loss within here and here with risk entries, both more than valid in my opinion. It just is what it is with the current market conditions. But yeah, once that high was blown out, with this volatility and stuff, that's when I'm just sitting on my hands, right? I'm waiting for those clear-cut textbook condition, market setups when we have price action like this. Once we start to kind of blow out and get really volatile, I'm just leaving it, right? I'm not risking my capital personally on this. It's not worth it until we get something very nice and clear like we did this morning, okay? And there was almost a clean long from within here, but it didn't quite set up, which we'll take a look at in a minute. But yeah, in terms of kind of a quick forecast, we'll have to see what happens. Potentially there might be some M1 entries within here if you're happy to kind of look for that extreme M15 wick. I'm not personally in love with it. I much prefer to be trading from completely unmitigated single candle pivot zones like this one, rather than kind of looking from within here. But what I prefer is potentially there might be enough orders within this M15 wick, and I'd like to see this M15 demand fail, right? Then we get the change of character and then something like that, right? That's what I'd much prefer. All things considered, right, with the current conditions coming off that monthly weekly demand where potentially we're expecting we're going to break out higher, etc. Look at the recent order flow, right? We're clearly bullish. There's no need to jump into an M1C within here if you don't need to, especially now it's outside of session hours. So that's M15. Let's take a look at the M1. Cool. So yeah, like I was saying, right, initially coming into London, I really didn't like this M15 POI, and I was kind of half looking at it. I wanted to wait for this level here, but when you start to see it set up like this, when you get a very, very clean M1 entry model coming into the session open, I'm just going to delete this so it's a little bit clearer, and volume kicking in, like clear momentum, I'm more than happy to hit it because the risk reward is there even for that kind of quote unquote quick move. Okay, very, very clear M1 equal highs, right? We had the larger M15 highs as well. We came into this extreme M1 zone. It's quite a large zone, obviously, but it was part of the supply chain, which was nice. Okay, but then more importantly, what happens after the sweep? We get this big overall V-shaped move. Okay, I need to stop saying okay a million times. It's getting annoying. That was the last internal pullback, right? And then all of those candles broke the prior candles high. So that is where the M1 chock is. So once we get that chock, right, where are we going to enter? Well, quite a clear zone, right? Refine that to the M1 single candle. It swept that high as well. So for me, that was a clear entry. At the moment, I am using personally a little bit of discretion with how to size my entries. Basically, kind of the rule I'm using in my head is that I don't want it to be over 3 pip stop on if it's an M1 entry, right? So when I lined this up on the distal, I was expecting 3 pips to kind of be above here. I actually quickly did this on MT4, and this looked like it was a lot higher above the high. But yeah, so 3 pips probably would have been a little bit safer in that instance. But likewise, as we saw yesterday, if this is going to be the right zone, price is not going to break this high, right? It's very unlikely to mitigate something in this wick. So you can be pretty tight to the zone, right? And that's enough of a buffer for me. So yeah, ended up working, just about got tagged in on the distal, and then that shot down nicely, giving us then that M15 change of character. So then as we start to kind of come into all of these M15 demand zones to the left, right, these very minor demand zones, you can start to either take profits or you can look for hedges as price is coming into here, right? So that's basically what I was doing. I'm not really interested in trying to catch these continuations down here. So once we came into this initial M15 demand, right, the M1 just stayed bearish the entire time. There was no bullish change of character. So okay, cool, now that one's failed. Now we need to keep an eye on how price is going to react from this one. So we initially come in, we react, there's no bullish change of character, okay? All of these candles break the prior candles low. That's all part of the down move. Then we pull back. All of these candles obviously break the prior candles low. We have an initial strong reaction, but we don't get the change of character. We come into that M1 supply and we push down, but then what happens? We fail to form a lower low. So then when price comes in and it breaks above the reaction to that supply, now we have a supply to demand flip because supply has failed to do its job. It's failed to put in a lower low, and we get the bullish change of character. Okay, so now what do we have? We have a bullish chock from the M15 demand, and we have a supply to demand flip. Okay, so that's when I then set my entry order in here, right? Bit of a demand chain. If this is going to play out, price should not break lower than this low, okay? So that's why I was happy to set my order here, but it reacted from this decisional flip, which essentially was, flipping kind of the supply within the, you can see it's kind of a bit of the matrix within here, right? This is the overall flip, okay? So you have from the base, the top of the reaction to the lower of the reaction, anywhere between these two orange lines is your supply to demand flip. So that's the demand in which you can enter, but obviously within there's flips within the flips, right? Where you essentially have that reaction to that supply that reacts and pushes up, okay? But for me, no inducement, no sweep, etc., etc. It didn't look that clear. I'm going to stick to the extreme in these cases and just unfortunately didn't get tagged in. But even if I did, I would have only been pushing it up to this supply level here, right? Where I then would have been looking to take a confirmation entry short within here to then look for those shorts there to the downside, right? But obviously what gives me a little bit more confluence and confidence to look to take these hedges, because I'm not always going to be looking to do this, but it's because of the overall bigger picture, right? The 4-hour chart for me, there's no real clear direction. We essentially swept that low even though it was a bearish change of character. We're coming off that monthly and weekly demand, and that's why I'm a lot more open to kind of taking these longs and trying to trade those counter trend moves. And for me, there was more than enough risk reward to push it up to the distal of that M15 supply zone, right, over the 5 to 1 RR. Are there. Now, in terms of management on this trade, I was looking to kind of manually take heavy partials around 10R, and I was thinking, I was a little bit sloppy on my management, really. I was hoping that this, kind of just a bit of hope, right? Thinking that this M15 demand was going to fail. I kind of liked viewing this all as external range liquidity. Overall, it looked pretty clean, nice pullback, and I was kind of hoping we were going to get that move there, right? Whilst being open to look for quick hedges against my short. Especially as at that point, I thought there was going to be a pretty decent chance that we were going to come into here and then have another nice entry short. But once I saw that very strong close on the M15, right, big bullish rejection, and I didn't get tagged into the hedge. At that point, this was a completely discretionary call. I don't usually do this, but I was just like, I'm not going to let take a break even on this one with the current market conditions. I could tell something was probably happening, or something was about to come from the news headline. Just a bit of gut intuition, volume coming in. 100%, this is a completely discretionary call. I don't usually do this, but yeah, just came out, took the 5R. But what I would recommend to the majority of you is you don't do that, right? Because that easily, right, it could have just rejected in here and it could continue down, and then I would have felt like a bit of a mug. But it is what it is, right? That's just the decision I made in the moment, and I'm happy to stand by that. But if you are, trying to find that consistency, trying to be mechanical, trying to be disciplined, trying to build your confidence with trading, stick to that fixed R method, right? I really can't stress that enough. I know it can be frustrating when sometimes it comes very close to your profit target, especially if it happens a few times in a row. But honestly, my advice would be stick to it. I really do mean that. Obviously, if it happens, multiple occasions in a row, when it gets to the end of the month, then you have a decent sample size of trades, then make a decision. I know it's as frustrating as it is, but just stick to it. Try and let that edge play out, okay? That would be my advice. Then when we came up into this POI, yeah, more than happy to then look for an M1 entry model within here, but obviously we've got with a ton of volatility, clearly no M1 shock. We broke up higher, then at that point I'm not really interested. Obviously you can just wait for at least an M1 confirmation, sorry, an M1 chock and demand fail. At that point we got it, okay, we're just trickling down. This is well outside of session. You know, at best you want to be looking for this POI, but again, right, we're very, very volatile. Price has to come a long way back on the M1. I would be looking for an M1 CE at a minimum from that level if you are happy to trade it. But like I was saying at the start, once we get these conditions, super volatile, price is obviously very reactive to you know, just headlines coming across the news. They're not the conditions I like to trade, right? This is the bread and butter stuff, textbook price action. Once it starts to get like this, I'm sitting on my hands. I don't personally feel the need to get involved. So right now, potentially, maybe this extreme is going to hold, right, this extreme wick, but I would personally want to see that M15 change of character, see that M15 demand file, and see if we can come lower. Obviously, some of you who are a bit more aggressive, you may want to look in for the longs from here and see if you can anticipate the break of this 4-hour supply chain. But yeah, sitting on my hands personally for now, and that probably will be me done for the day. As you guys know, I very rarely trade New York, and we have FOMC tonight. So hopefully that can give us a bit of volatility to break out of this sort of current supply and demand bit of ping pong we are playing. Okay, hopefully guys took some value from that. As always, if you have any questions, feel free to shoot in Discord, and I'll do my best to try and help you guys out with that. Cheers guys.